who get Social Security are seniors because it's OASDI, Old Age Survivors Disability Income. So there's the three basic groups. There's old age, which is most of Social Security recipients. There's survivors, which is minor children who have a parent pass. They get Social Security payments up to the time they're 18. And disability is, well, disability. If you pay in for a certain amount of time and then you become disabled, you can get Social Security disability. So they're only talking about the seniors here. So the survivors and the disability income, you're not on the list. And again, there's a fact-checking element to this of how do you verify that this is old age Social Security versus the other types? Because on the forms, that's not evident at all. You can probably figure it out based on age, but so that's probably one of the simpler adjustments. So the no tax on Social Security for seniors, I'm actually in favor of this one for sure. Well, I'm in favor of all tax cuts. Let's just say that. But this one makes the most sense to me because the Social Security system was not created as a pay your own benefit. It's not like you invest in Social Security and then you get a return of that Social Security when you retire. You pay into the fund, pays out to current recipients, and that's it. There's no savings account. There's no lockbox with your name on it. That's all just political fiction. You're just paying into the fund pays out, and then the end. Okay. If you're 45 and when I turn 68 or whatever the full retirement age is, whoever's paying in then is going to be paying me. And so even with that said, though, there is a sense in which it seems unfair, right? Because if I paid in on my wages my whole working life and those other people were basically getting my money, it's like, why am I then turning around and paying taxes on money that I'm receiving at the other end of the system? Because they get you coming and going, right? So there's an element of fairness that I think we could or should eliminate taxes on the Social Security I would say for everybody, but for seniors, sure. The big criticism that Trump has gotten on this issue is that if you reduce the tax on Social Security benefits, then that money is not coming back to Social Security. And that's going to accelerate the rate at which Social Security goes broke. And that is true. However, I ran the numbers and I looked at the actual budgets and I looked at the population forecast and all this kind of stuff. And it's a 6 months difference. So instead of going broke in December of 2033, it'll go broke in June of 2023, or 2033. So it's okay, yeah, you're true, but not significant and doesn't really make that much of a difference. Might as well do it. And people, of course, ask, what happens after Social Security goes broke? What happens if nothing else changes is your benefits go down. Because historically, from 1930, was it 33, 32, 36? Sometime in the 1930s, Social Security was implemented and people have paid in taxes. And for a long time, Social Security was running a net surplus, meaning that more taxes were coming in than benefits were being paid out. And Congress took that money and spent it on other stuff and gave the Social Security Administration a bond, basically a treasury bond. And I can't remember the year off the top of my head, 15 years ago, let's say, Social Security taxes coming in were no longer enough to pay the benefits going out. The Social Security started cashing in those bonds to make up the difference. And so that has continued to today. And in about 8 years, according to current projections, and they update the projections every year, in about 8 years, those bonds will be exhausted. And now the money coming in from Social Security taxes of various kinds will not be enough to meet the outgoing payments, which means the outgoing payments are going to be cut until they meet the incoming taxes. So that's what's going on currently. That might be changed with legislation and who knows, but that's the current situation. So if we, basically $50 billion worth of revenue to Social Security each year comes from the taxes on people receiving benefits. So that's the number that we're talking about, is reducing that 50 billion to, pretty much zero. Because most disability Social Security recipients and most survivor Social Security recipients don't pay taxes because their income is not high enough to trigger any of the Social Security to be taxable in, I would say, the vast majority of cases. So the people paying that 50 billion are the seniors. You can take that for what it's worth. That is the no tax on Social Security. I'm in favor, just from a basic fairness perspective. No tax on overtime. So this gets tricky. So what does it mean to get overtime? And if you look up the labor board, the requirement is that if you are non-exempt and you work at least 40 hours or over 40 hours, then your employer is required to pay you overtime, time and a half. The the strategy mind of mine immediately goes to work is okay, so we got two issues. So one is exempt versus non-exempt. So if you're non-exempt, you're considered hourly, right? If you're exempt, then you're in a management position of some kind or another. Historically, historically exempt meant that you were a higher status. And so a lot of people took it as a badge of honor that they were not being paid hourly, that they were paid salary. And so this might change some of that. Do I really want to be management, quote unquote? How many managers are really doing manager work? Subject to debate. And then the overtime part, it's like the way the law is written is that if it's over 40 hours, you have to pay overtime. There is no regulation on paying overtime under 40 hours. So could it be an employment benefit if you start paying overtime at 30? I don't know. Maybe. Maybe my job only takes 10 hours a week and everything after that's overtime. So anytime you're fiddling like this, you invite these kinds of questions. And you can be 100% sure that there are going to be people out there like me who are going to look at the regulations, look at the legislation, and figure out what is the most advantaged way to play this. Because that's what we do, right? Nobody wants, not nobody, all of our clients at least don't want to pay taxes, but they want to do it in a legal and ethical way. So if whatever the rules are, we will follow the rules in the most effective way. Issue with carve outs, and this used to be called like voodoo economics, where you would assess special taxes on this and they would sunrise and sunset. It's generally a bad idea. What is better is just to have a wholesale system that works across the board, but then you can raise and lower the total so that you spread the base out as far as possible. And there's lots of economic work on why that's more advantageous as opposed to these special carve outs because it reduces the distortions in the economy from people trying to take advantage of these special carve outs. No tax on overtime. We'll see how that works. And then we'll have to work on the reporting element of like how much of that is overtime and how much is regular. It could be done. Not everybody's tracking that in the right ways, and so people have to upgrade systems, and so compliance becomes more complicated because the reporting will have to be more complicated as we have these different kinds of issues. Renew